What's up, traders? So, Robinhood is ripping today, and it's worth making a video about because I've talked a lot about IPOs, and what I've tried to make people do is be patient. Now, a lot of people may have gotten in on the initial IPO, and they took a little bit of a haircut if they didn't have diamond hands, down about 10%. But now the people that jumped in are getting rewarded. But that doesn't mean it was the smart thing to do. I've talked a lot in past videos about how you should play IPOs. And it basically means just being patient. And that moment for you came today. Now, on the daily chart, it's of course breaking out of this high, the IPO day high, which is good. That's what you want to wait for. But there was actually some really more fine points that you could have used. Let's look at that price action because it's a very good learning experience. So let's use the uh, feature here in Trading View to go back to this morning. So this is what the price action looked like this morning. This is the 9:30 5 a.m. open bar. You had a higher close on this bar than the close of yesterday, and you had this spike down. So it gave you a little hint of price action, but here's what you really need to key off of. You want to look for the major high that you had up here, and that's what's going to help you to define what is the breakout level. Just a little bit above that. That's what you want to key off of, set an alert, or just watch it. And so there was also these levels right here that we want to look at. These were very good resistance levels, and it can let you key into another one. So we have two key levels here that can be served as breakout levels. And this is what I noticed as price action happened. So you had right here at the open the first breakout level. Now, this in itself is a good sign to enter a trade. But what makes a real trade is defining your risk. You can't just go jumping in with all of your capital without having any mind for risk. But this morning spike is what presented that to you. Remember how we saw that this bottom of this spike right here, that defined the price action. So what you could have done was set up a breakout off of that level like so. Maybe even just take it up to the high if you want to be patient, or leave it on for more. And so again, it went up and we were able to catch it. And then a second breakout occurred here as well. Say you missed the first one. Well, then you could go and you still know where your risk needs to be as well. So now you're able to have two entries and you're able to leg into this trade and you're able to capture it as it goes up. And so this would be what I would want people to do on IPOs. Don't buy it the first day because, as you see here, there was plenty of money to be made in the days following, and you can still become an owner of the stock. Plus, instead of having to take this 10% drawdown or 12%, as it were, you could have only given it about 2.5, 3% of risk and been able to play the breakout. That's fantastic. A really good risk to reward right there. So this goes back to what I've been saying about IPOs. Wait until you have some established price action. And that's going to be highs and lows that you can key off of. Look for pullbacks to 50% retracement levels that they may set up, or breakouts of these major highs. Hope that helps, folks. Trade wisely. We'll see you in the next videos.